Is of course overnight they're almost at about $2,400, right? So that's the other thing. 40% of its book is gold. You got the start, which is at about 22,120 on the Nifty. So it's a lower start, almost at the 61.8% retracement at the word go. And there you go. 22,138 is where we are at right now. The Nifty Bank is down about 0.75%. That's about a 350-odd point cut. Mid-cap index is down 0.67%. And I think we'll have the other indices come up as well. There you go. So that's a start. Advanced decline on your screen right at the top. So it's about 2:1 in favor of declines. Yesterday we started with a 10:1 declines to our advances ratio. So this is much better. But it's a lower 150-odd point down start. But Sonia's got more rates. Sonia.
Well, thanks a lot for that. So it's a lower start, but down but not out, you'd have to say, as we kickstart trade this morning. Let's get straight to individual stocks now. ONGC and Oil India expect some negative reaction over there as windfall tax on crude has been hiked to 9,600 per ton from 6,800 per ton earlier. Indigo is the other one. Expect some positive reaction over there as the company continues to hold their market share above 60%. And in fact, market share of Indigo has gone up after the recent troubles that we've seen at Vistara. So the stock is actually outperforming the market, as you can see on your screen. Varun Beverages, Morgan Stanley has initiated coverage with an overweight. They have a target price of 1,700, which is a big upside to the current market price. And remember, this is a stock that has given huge returns to investors. So Varun Beverages holding up over there. Jio Financial Services will be forming a 50-50 JV with BlackRock for undertaking wealth management and a brokerage business in India. It's just charging ahead, 3.5% higher on Jio Financial Services. Then you have Bharti Hexacom. Jefferies has initiated coverage with a buy, target price of 1,080. Look at that, bucking the trend in the market, up 2.5% as we speak. Jefferies writes that this is a way to invest in those parts of Bharti Airtel's business that are growing faster. So the street definitely likes what they're seeing with Bharti Hexacom. DOMS is also in focus. Nuvama has initiated coverage on DOMS with a target price of 1,944 rupees, big upside to the current market price. They talk about strong business potential there, and DOMS is up about 3.5%. Then you have a couple of more stocks I'm looking at. Exide, we were talking about this earlier. Nomura has raised their target price on Exide, and it's been a stock that has really, been surging ever since it signed that MOU with Hyundai and Kia to provide EV batteries in India. So Exide is up about 1.5%. And Cipla, there's an acquisition of a personal care business. So Cipla is up in the green. Last time I checked was flat with a bit of a positive bias. But all in all, you'd have to say weak start to trade. It's the Nifty Bank that's really dragging its feet, down almost 400 points.
All right, Sonia, thanks a lot for that. Well, let's focus on a couple of more names. Happy Fortunes, the stock is up. It's up close to around 3% in otherwise wobbly market. They won a 60 to 70 crore per annum order from a leading global automobile manufacturer. So that explains why that stock is up 4.5%. All cargo terminals, well, the March 2020 CFS volume showed a mild increase of around 1% and 8% increase on a month-on-month basis as well. So that stock's opened up with a gain of close to around 3%. Transformers and rectifiers, well, that stock has opened up well in the green because GETCO, or more commonly known as Gujarat Energy Transmission Corporation, they have withdrawn the stop deal with immediate effect, which means now the company can supply to GETCO. So that stock continues higher. In fact, in the last 1 month or so, it's up more than 75%. And the other one is Spark. It continues to reel under pressure. The stock is down close to around 5%. So that one, in fact, continues to trade at lower circuit. And all in all, it's not too bad in opening in terms of, the GIFT Nifty was suggesting a 200-point downtick. We're down close to 100 points as we speak. And the mid-cap index, guess what? That's moved into the green. The advanced decline ratio tells you the picture. More number of stocks advancing as of declining just in the initial few minutes of trade. Prashant.
Well, 100 points down, right? 22,160 is where we find ourselves at. So that's a start. I mean, it's not like yesterday. Yesterday also, it was not a sort of vastly down start. And then, of course, the market fell to a low, recovered. And then the last 40-45 minutes, there was a sell down once again. TCS is down 1%. So on the downside, right? Earnings came through Friday evening. There was some hint of green, and then, of course, nothing. It sold off. Infi is the other one which will report, but 1.25% lower there. Zomato is down about 1.25%. It's done very well. So some pullback. Bajaj Finance is down about 1.33%. Kotak Bank is down about 1%. So a lot of banks there coming through. LTIM, Rima was telling us about that one. Apollo Tyres, RBL Bank, Coforge, Federal Bank, these are all in the 1.5% vicinity in terms of cuts. So nothing very large, but that's the kind of market that we have. On the upside, I think we mentioned Geofinance. Look at Senco. Senco is up 7% after yesterday's 18% move. That's a 25% move, of course, just starting the day. But that's a very large move into 4 digits now, 1,022 on Senco. And by the way, it's coming up as the second largest volume-led gainer across the board. So, I mean, that is saying something. Aegis Logistics is the other one, which is Aegis Chemicals, 6%, 6.25%, 517. It's coming up as the third largest volume-led gainer. I mean, it doesn't usually come up at this point, at this stage, right in the word go with these kind of volumes, but it is right now. And that's why we are mentioning it. And of course, RK Forgings and Castrol India are some of the other 2-3% kind of movers. So more of this in terms of specific names as we go along. But let's welcome in our market master of the day. Krishna Sanghvi is Chief Investment Officer, Equities at Mahindra Manulife Investment Management. Krishna, great to have you with us here. Thank you very much for your time.
Thanks for having me.
How things, what are you guys doing at the fund, Krishna? If you can talk to us a little bit about what's the stance like as far as the markets go, because, a lot of new entrants in the asset management space, and it's an interesting time to start investing because, of course, what the markets have done on the way up. So just wanted your overall sense right now.
Yeah, sure. Yeah, you're right. We're in an interesting space. India as a country, asset management as a business has its own potential. Economy grows, earnings grow, corporate earnings grow, individual incomes grow, and you have nice space for where we're in a sweet shop where nominal income for India is likely to grow much faster vis-a-vis rest part of the world. So if you're going to have a double-digit nominal growth, it's a nice sweet spot for everything. The same side of people will consume something, they will invest in markets, and they will have their entire capex cycle from corporate side stroke real estate cycle. So the environment is good. India is in a sweet spot, as I was repeating maybe. What's possibly needs to be taken care of in this journey is the valuation. We right now in a spot where if you really look at the next 5, 7, 10 year journey about how economy is likely to go, and even if you do a retrospect, look at last 15 years, at various points of time, Indian economy would have seen as tilted to one particular segment of markets. But over next couple of quarters or years, the things change and some other set of sector or the economy picks up, and that's in a way you can call it a relay race equivalent, where there are too many sectors, each of them have a right to grow because there is so much interdependency. Okay. If you want to have more car sales, by default you need more steel, and maybe someday more electricity, and maybe someday more need for car loans. So interlinkage among sectors is pretty interesting. So when we were a $1 trillion economy, let's say somewhere in 2006 or so, vis-a-vis today where we are, we've seen enough phases where sometimes consumption takes over the phase of growth. Somewhere it's capex, somewhere it's financials. So we expect something very similar to play out in next 5-10 years, where almost the entire spectrum is going to grow. One interesting sweet spot which we believe is what markets needs to factor is if you look at core segment of economy, and let's look at, let's not forget the 10 years of reasonably low investment in the space across the spectrum, whether it is metals, whether it is, electricity, whether it's refining capacity. So you had a phase somewhere in, early decade, which was somewhere from 2005 to 2010. A lot of capex got initiated there. Capacities came up, and like these industries are high gestation period, so you just can't create capacity only for 1 year. You have to create for 5 years or so. So a lot of capacities were created that time, and then in the next decade, somewhere from 2010 to 12 onwards till 2022, there was reasonable, let's say, overcapacity stroke underinvestment by corporates. And now where we are today, maybe in 23, 24, you have a situation where the way India is going to grow, you need far more steel, far more power, far more refining throughputs in next 3, 5, 7 years, and a pure data point of already announced capacities tells you that we might running short of capacity somewhere in 27, 28, 29, depending on the end product.
Got it.
So unless the capex cycle starts today, so I think one core theme is economy does well, core economic sector leads the show through corporate capex or maybe public sector event capex.
The only problem, I guess, that the market is also waking up to right now is of course, there are geopolitical concerns, so that could put a brake on the rally. B, a lot of the internals, right, are not looking that good. Where the crude price is moving higher, gold is moving, is seeing a lot of central bank buying. The US 10-year yield has moved up. Would you be a bit cautious that perhaps time has come for some sort of a correction in the market before the resumption of the uptrend?
Yeah, I think global uncertainty clearly creates a sentiment overhang. Because let's look at it this way. Indian markets are clearly a function of how global sentiments behave. Earning growth is ours, but the risk appetite in a way comes from how global markets behave. So clearly what's changed in last maybe a couple of weeks or so on geopolitics is slightly different. Those things do put some sort of I'll put it a speed breaker as a right word rather than a break. So to an extent, what can happen is the pace of change possibly can be slightly different. But on a very macro piece, if you really look at, and keeping gold aside for a minute, let's look at crude, let's look at dollar index. They are today trading at those levels where in last 20 years we've seen those levels always. Like dollar index at 106, I'm sure in last 20 years we've seen those numbers. Crude at 95 or 90, we've seen those numbers in past, both up and down. I think the bigger picture is economy. Economy grows, the risk appetite can be driven by those global macro, we can't deny. Coming from a nice base of a fabulous rally of FY24, which none of us can actually complain about. Yeah, it makes sense to be slightly more watchful, and in markets, what makes sense to be watchful of valuations rather than the markets, because economy is going to grow, markets are going to replicate, the pace can vary, but I think if you keep control of valuations, I think a lot of things gets evened out, And volatility in our markets actually is slightly, at the risk of exaggeration because of the intensity of, leverage participants. I think it's less of economic challenges, it's more of reasonable amount of, derivatives, usage, leverage participation. And as we know, leverage has its own, challenges of how, market forces people to unwind their positions. So I think that can be a risk.
Okay, all right. Hi, Krishnan. Welcome to the show and good to see you in the studio. Well, I wanted to ask you your top themes that you're looking at. Before we do that, I just wanted to focus on the markets for just a bit. We have recovered considerably from the low point of the day, and a couple of factors are playing out here. The Nifty Bank is hovering around the 20-day MA, which is a crucial mark. We're trading a little below that mark. You'll want to see a bit of a recovery from there. So the Nifty Bank should come up for you on the screen. And Reliance Industries has recovered close to around 1% from the low point of the day. So that big boy as well is fighting for the bulls. Explains why now we're down only around 85 points. The SGX Nifty was suggesting a 200-point downtick, but we have seen a bit of a recovery from the low point of the day. And now the number of stocks that are advancing are in the ratio of 2:1. Well, Krishna, you mentioned numerous times that India is in a sweet spot. Maybe in the near term, you have a couple of speed breakers, but the trend is that we're going to do well. So tell us your top 2-3 themes. You've already mentioned, I think, power, steel, but what would be the top 2 themes that you would look at? And if you could, just elaborate a little bit.
Sure. So let's say the core economy is a theme, which we like, and that's pretty much part of our portfolios. It's focusing more on, capacity creation for next, 5-7 years. Other part is India manufacturing, which is an interlinkage to it. Let's put it this way. Those core economy provides the infrastructure support, while the manufacturing is the next story for India. You look at this year, we started with PLI being the word where, the idea is that whatever India is today consuming can actually be produced in India if it's imported, or what the global customer wants, can it be made in India? So you have a nice sweet spot of India manufacturing can come in to supply exports to the world, can come in to, replace the imports.
Right. So you like the EMS theme? Do you like the steel production theme? Because as you said, there could be a bit of a shortage in the next 2 years or so. Though we have capacities that are coming on stream, demand could catch up and then maybe be turned into a next net exporter as well.
Yeah,
so
precisely. And that's where, I'll possibly say there's a linkage of those 2 themes, because if India is going to produce something for the world, or India is going to replace import of some other component which is coming from the world, let's look at it this way. Those products were being produced in world by using some component called power, steel, or refining throughput. So, in a way, from a factors of production perspective, a steel which was used in maybe Germany, or, power used in China, whenever those products are to be either replicated or, substituted in India, you will have the same sort of steel or same power or same refining throughput to be consumed. So that's a big piece, I think, which is what manufacturing and whatever is happening on, on this mid-term picture of creating those in-house, because these products are such that you cannot rely on imports. You cannot say, I'll import some of this and then make for the world.
But there is also this renewable, and the source may differ, right? It will change over the next decade or so. At least we're trying in that particular direction. So from an investment thesis point of view, how do you take that into consideration? Or you kind of say, well, that's some time away, we're okay for now. I mean, focusing on traditional sources of, as you said, power, etc.
So clearly, it's a transition and growth combination which India is trying to manage. For a lot of other countries, they are just replacing existing infrastructure with a new capacity, which is renewables, let's say in power case. In India's case, we actually going to grow and parallelly replicate. So our sense is that we will still be using the existing traditional power sources called essentially thermal, let's say, for a reasonably long period of time. Even if you look at very macro picture, maybe India is the only country which actually has a 2070 as a net zero. So very fact you have a 45-year-old runway of achieving net zero, there is a fair chances that we actually going to consume more of those products before you reach a picking point, and from where the reduction starts. Because the traditional is the biggest source of levelized supply option for power, and similarly for petrol, diesel kind of fuel. If we going to grow, we will have to use those factors of production. So in a way, it's a replacement of somebody else. So I'll say yes, transition is a must. Right steps are happening on that front. So parallelly, every utility is investing into renewable as well as in thermal.
So when you talk about transition, right, we have a very interesting discussion which is lined up in a while from now about Elon Musk coming to India, sort of setting up a plant and, signing up with the Tata Group, etc., for the semiconductor plant and all of that. But I wanted your thoughts on how to approach this, right? EV adoption is a big focus area for the government, but unfortunately, things have not picked up as much as they would have liked. So from a stock market angle, how are you looking at it?
I think clearly EV or any such technology in the early phase is going to be more driven by narrative.
Correct.
The ability of these players to scale up is a function of their own ecosystem of vendors. OEM cannot suddenly say I'll produce X quantity of the end product because my ecosystem is not in place.
Correct.
So it takes time, and that's where we are. I think EV as a sweet spot. Again, it's something which we following the world. Other countries possibly started slightly ahead of us, so they on a slightly higher curve of EV adoption.
No, but a lot of these stocks have rallied. I mean, Tata Motors is at 1,000 rupees now. So for someone who's perhaps not participated in this rally yet, does it still make sense to, jump onto this EV adoption theme?
Conceptually, yes. But again, the same thing, if we are in a net zero, we have a situation where EV need not be the single biggest driving force. Existing vehicle still needs to be sold. Maybe hybrid, which is another technology coming up, can be relevant. But yeah, I think if you're really investing for that medium term, long term, why not EV also?
Okay, all right. Krishnan, final question then from my end before we let you go. We have taken on board all the positives. And as you said, India is well placed. But important to put some caution as well on board, right? So as you said, crude we have seen at these levels, the dollar index we've seen at these levels. You're not looking very perturbed with regard to the global picture. What's the key risk then to this big Indian stock market rally that we're seeing and the booming Indian economy?
Sure. So I think there are two clear risks. One clear risk is what happens to the world. We are very much a part of it. We have to be cognizant that Indian markets are perhaps trading at among the highest valuation vis-a-vis any other global markets. So, so valuation, and we've seen over time, valuation requires positive sentiments.
Yeah.
Higher the valuation, you need more higher positive on sentiment front. So we need to be aware of. So same variables called dollar index, called oil price do matter. What I really meant was that those things are a cyclical where some portfolio stance can change, some sector allocations can change. But it's not that, they are always in a one way up and down. It's a cyclical behavior of those, global indicators. Second one in the Indian context is the expectations. I think expectations are so strong among investors that, so one is on the earning growth itself. Expectations are high in terms of ability to do much faster. And second part is, in a way, the belief that because nothing much is going to go wrong, let me take a leverage route to participation. Because a lot of people think if the certainty factor is, it's like, how you drive on highway, right? The moment you see a open highway, you bound to drive at 100 or 120.
The complacency factor makes.
I think complacency, over expectations is what investors typically, should be careful of.
I think, the street heard the number of times you said sweet spot for the Indian markets, because the market has recovered from the lows, and there's definitely, some dips are getting bought.
Yeah, it is a time frame, honestly.
I understand that. Yeah,
I think
of course,
what you said, right?
apart.
If you zoom out a little bit and extend the time horizon, then some of these other things matter lesser. The impact is becomes.
We've seen $90 in 2008. Crude, right? So it's not something new. It's just at that point of time, what changed for India? Maybe currency depreciates to adjust those impacts, and some other set of sectors can overtake leadership, and those things do play out in economy, and that's why like this is the concept of profit pool participation. Yeah. Too many sectors, each of them benefit.
None of us want to remember 2008 because of post that, of course, you had that $90 crude and you saw what happened with the markets as well.
Yeah, but then see what happened after that. Right?
Yeah, after that there was a big recovery. Got it. The time frame is important. Well, thank you so much for joining us. Appreciate your time here on CNBC-TV18.
Thanks. Thank you.
Okay, well, for the market, it's actually recovered from the lows, which is great to see for the bulls, that is, if you're a bull. The Nifty is now down just about 70 odd points, and the mid caps are actually in the green. Let's move on. With days to go for Elon Musk to visit India, sources say that Tesla and the Tata Group are set to join hands. Tesla is likely to procure semiconductors from Tata Electronics as it eyes a local sourcing for allied EV infra. Tesla is expected to announce a manufacturing facility in India during Musk's visit next week. To discuss more on this likely development in the Indian EV space, we're joined by Gagan Sidhu, who's the director at the CEEW Center for Energy Finance, and Shirish Chandran, the editor at Evo India magazine. Gentlemen, morning to both of you. Shirish, let me start with you. Just set the tone for us, right? Tesla entering India, what happens to the incumbent players? Is it really a threat for something like a Tata Motors? And in any case, the EV ecosystem here is taking time to sort of fully develop. So at a time like this, with Tesla entering, how do the dynamics change?
Well, Tesla entering is going to be great for the Indian EV market because they're going to make so much of noise in India that will really give that whole impetus to the Indian electric car scene. And it will grow the market because the more players that come in, it's better for everybody because there is more confidence. Buyers get more confidence in electric vehicles. And also it will offer something that is not really there. So Tesla would probably, their entry-level model would probably be around 25, 30 lakh rupees when they start making it here in India. Right now, okay, it might give competition to Tata Motors' high-end vehicles, Mahindra's upcoming high-end vehicles, but overall the market will grow. And also they're going to invest so much in local manufacturing, and that will help everybody across the board.
So, you spoke about how what happens to the incumbent players, right? Tata Motors is the most formidable player so far in the system. And before I toss this to Gagan, I wanted your thoughts on that, because we have seen a fair amount of slowdown in the passenger vehicle EV sales across the board. Is it because of the lack of options? Is it because of, charging infrastructure not sort of developing in its entirety? What do you think is causing this slowdown in the passenger vehicle EV space here in India? And with Tesla's plans, do you think that could sort of revive the, animal spirits in this space?
Early adopters have already bought electric vehicles. They're all happy with it. In fact, if you look at the kind of response that they've been giving, they're all happy with it. Now it is to jump.
Gagan, sorry, Shirish, we can't hear you. Sorry, yeah, go ahead.
They need a kind of push from the fence, and coming in will probably be that push. And Tesla
I'm going to come back to you, Shirish. I think there's some issue with your video, so I'll come back to you in a bit. Let me get Gagan Sidhu into this conversation as well. Gagan, your thoughts on Tesla's entry and how this would sort of change the dynamics of the EV market in India?
Sure, yeah. I'm just going to echo what Shirish said. It can only be a good thing. We're really at an early stage when it comes to India's EV transition. Penetration is, it's been growing, but it's really not at a level where it's anywhere close to what the government visions that it wants to achieve by 2030, which is about a 30% penetration on average, right? So you want the EV ecosystem to grow. You want new models to come in. And remember, India's EV transition so far has actually been led on the volume side, at least by two-wheelers, e-rickshaws, and three-wheelers, right? It's the four-wheeler segment which has lagged quite a bit. Some of it has got to do with the fact that charging infrastructure is an issue. Some of it has also got to do with the fact that perhaps there's not enough model offerings. So I think Tesla coming in can certainly add to the mix in terms of boosting the supply or the availability of choices for consumers.
Can you build on to that? I mean, EV adoption in passenger vehicles has been plateauing for the last many months, right? And the adoption is less than 2% at the moment. You spoke about two things, limited options as well as charging infrastructure issues. Let me add to that. There is a pricing premium as well, right? EV cars are at the moment about 30-40% more expensive than an average petrol car in the same category. Do you think that is another hindrance? And will Tesla be able to navigate all of these problems?
Yes, certainly. I think, pricing is certainly an issue. In fact, when you talk about pricing, it's also important to bring up the topic of policy, right? There's a host of policies actually that, we tend to sort of not fit together and look holistically on offer to drive or catalyze the EV ecosystem in India, right? So to start with, for example, there's a production-linked incentive, not just for EVs, but for advanced automobiles. There's FAME, which actually sunsetted at the end of the previous financial year, just last month. But as a demand side measure, there's that electric mobility promotion scheme which has come in as a bit of an interim measure. There's lower GST on EVs, 5%. There's state level policies on top of all this, right? So I think all of these things sort of work together in tandem to inherently reverse the pricing disadvantage that electric vehicles face vis-a-vis ICE vehicles.
Got it. Let's also touch upon what's happening globally, right? Shirish, I think Shirish is back with us. A couple of weeks ago, Tesla announced that for Q4, their numbers were weak. A couple of days ago, they decided to lay off 10% of their global workforce. This speaks a lot about how there could be a big global slowdown in the EV space. I mean, is that just a blip or do you think it's a structural slowdown? And what do you think the ramifications of this could be on the Indian market?
Well, not just Tesla. Mercedes also recently walked back from their goal towards 2030 all EVs. So they said that after 2030 also they are going to have combustion vehicles, maybe hybrid combustion vehicles. So globally, all manufacturers, not just Tesla, are seeing a slowdown in the EV space. But let's put it into perspective. Globally, EVs are at a more advanced adoption level. In India, we still have a long runway to go to get there. EVs are less than 2% of overall car sales in India. So we have considerable runway, and India, I think as a market, is suitable for EVs. If you have your own parking space, if you can put your own charger, you are sorted. You don't really have much issue in terms of range anxiety and where you're going to charge it and all of that. In fact, with an EV, it is more convenient. You don't have to go to a fuel station. You don't have to line up for fuel, petrol or diesel or whatever. And also driving around an EV in the city is actually much easier than driving a combustion vehicle. So here in India, if you don't look at what's going internationally, because Indian market dynamics are very different. Also, the affordability levels in India are very different. With an EV, your charging costs are almost next to nothing. It costs less to run an EV than to use a local municipality transport bus. So your running costs are very low, and Indians are very value conscious. So I think there's a long way we can go, and there is space to grow, lots of space to grow in India.
So, you were earlier telling us, Shirish, about the issues that the passenger vehicle space and the EV market are facing, right? Penetration is less than 2%. And there are three main issues that we discussed with Gagan as well. Limited options in the EV market, a premium pricing. Most of these EVs are 30-40% more expensive. And then range anxiety. Do you think we've made any headway with the three of these issues? And by when do you think penetration will reach, about double digits, 10%?
Okay, so let's start with cost. The more players come in, overall costs go down, okay, because volume increase. So that's one side of thing. And that's a great thing that testing it, because they do a lot of local manufacturing, and that's really going to help all of us. So that's one. Range anxiety, a lot of the OEMs say that it is over-indexed. We tend to stress a little too much on range anxiety. If you have a charger, and now suppose you are commuting in Mumbai, with your home charger, you are fine. And how many times do you go, say, Mumbai to Goa to go and drive? Once a year, twice a year? That time, of course, you have to plan it out. You have to charge up completely, maybe stop at Kolhapur and then charge until you get to Goa. But the newer range EVs that are coming will have a real world range of, say, 500 kilometers. For your Mumbai, Goa drives that you do maybe talk about. But honestly, it's not really an issue. And if you talk to anybody who's been using an EV, they don't really complain about range anxiety.
Okay, I think you have some issue with your video again, so we'll try and come back to you in a bit. But Gagan, I wanted your thoughts on it. You know, you spoke about how the EV adoption has largely been in two-wheelers and three-wheelers. But even if you look at two-wheelers, right, currently adoption is what, at about 6% levels. How much do you think this can scale up to? And the market structure has been pretty closed. I mean, there are 6 to 7 players, amongst which the top 4 players enjoy 80% of the market share. Do you think this space, the two-wheeler EV space, could open up in a big way?
Yeah, I think, one of the big things that's driving EV adoption in the two-wheeler and three-wheeler segment is that you don't really need to rely on public charging infrastructure, right, to charge these type of vehicles. You can actually do it in a home setting. That's been a big plus for it. On top of course, all those incentives that I mentioned earlier, right? A lot of these incentives actually are actually driving, particularly the two-wheeler, three-wheeler segment. And, this electric mobility promotion scheme, which has come in as a bit of an interim successor to FAME 2, which lapsed on March 31st, actually specifically focuses on the two-wheeler and three-wheeler segment. So I think there's a big push to actually get at least this segment to electrify first, and then to actually have more sort of manufacturing-led type of growth that's going to come and drive the four-wheeler segment. Finally, in tandem with, of course, that all important charging or public charging infrastructure, without which, of course, the four-wheeler segment really will find it very, very challenging to grow.
Gagan, I wanted your thoughts on the auto ancillary space. Which are the companies that could be big beneficiaries of Tesla coming through to the Indian markets? And do you see a large potential here for them?
Yeah, so we don't really track at a company particularly level, particularly in the auto ancillary space. So that's going to be something I'm going to sidestep. But more, broadly for the ecosystem, where we are in terms of penetration, of course, the penetration level across all categories crossed 5%. And of course, it varies. In terms of electric three-wheelers, it's much higher. In terms of electric four-wheelers, it's much lower. In terms of electric two-wheelers, it sort of mirrors where the national average across categories is. But because it's still so low, it can only be a good thing to have a Tesla come in. And I think the way to sort of look at it is the several policies that are in play on offer in India are actually not geared towards any one particular company. It's actually to the benefit of the Indian auto sector. It's not for any company or for any country or against. It's for the benefit of the Indian auto sector. It's for the benefit of decarbonization, right? At the end of the day, we talk about net zero. 10% of India's emissions actually come from road transportation. So if you want to diversify away from, emitting sources of transportation, electric really is the top way to go. And finally, I'll close out by saying that, a lot of us tend to sort of forget what an important role policy has to play in both capital raising and capital deployment decisions. When it comes to the energy transition, we've seen it in the renewable space where quasi-sovereign offtake, where reverse auction for price discovery, and solar parks to sort of mitigate land aggregation risk have done wonders. Similarly, in India, I've talked about all those different schemes on offer. On the demand side, you've got FAME, of course, which is sunsetted, but you've also got lower GST, you've also got state policies. And our own research at CW showed that states with EV policies actually had 2x better volume growth. States with higher incentives actually had 5x better volume growth.
I'm glad you mentioned that, because Tamil Nadu, right? It's known as the Detroit of India. It's aggressively pushing itself to be a manufacturing hub for Tesla. Shirish, you want to just wrap this up for us? Which are the auto ancillaries that could be big beneficiaries, and how do you see this entire thing play out now with Tesla coming through?
See, Tesla makes a lot of this stuff in-house, but look at it in terms of the knowledge that they will bring into the ancillary space. I was talking to the Tata Motors engineering head recently, and they said that globally there a lot of advancement in terms of electric vehicle technology, but nobody comes and gives that to you on a platter. Nobody shares it with you. So in that sense, we are kind of trying to catch up to what they're doing globally, but Tesla are at the very cutting edge of EV tech. So them coming in will just add to the knowledge base here, which everybody, Tata Motors, Mahindra, all the two-wheeler space that we're talking about, and the two-wheeler space is actually the space that EVs are rapidly growing. When was the last time you heard of a combustion scooter being launched? Nobody launches combustion scooters anymore. Everybody's doing electric scooters. So they will also benefit, and that's what will benefit the mass market transition to electric vehicles. So overall, I think it's fantastic for the ecosystem.
Yeah, yes, even I'm very excited, to be honest. Can't wait to see the Tesla Model 3 in the Indian roads, right? And of course, the entire ecosystem sort of growing with that. Shirish, Gagan, thank you so much for joining us on the show. Appreciate your time here on CNBC TV18. Let's slip into a quick break. On the other side, our special segment, Quarter Se Quarter Tak. We have earnings expectations from the FMCG sector, and we'll come back with lots more.
Okay, 90 points lower on the Nifty. 22,190 is where we're at. The big mover today, like yesterday, is Senco. Repeat performance, almost 10% on some very, very strong volumes today as well. So that's a specific stock check. But time for our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from sort of sectors, various sectors. Today, of course, it is FMCG. Mangalam is standing by to tell us what to expect. Mangalam.
Well, you know, for the FMCG sector ahead of the general elections and after a long spate of demand weakness, the question on everyone's mind is naturally, ab ki baar recovery yaar. Well, while recovery is on everyone's mind, let's take a look at the fourth quarter expectations in three buckets. What's the same, what could be different, and what we know. So what's the same? We already know that demand conditions are similar to what we've seen in the last 3 quarters. Operating profits for companies will grow ahead of revenue. That means there would be some margin expansion. And in the consumer space itself, discretionary would do better than staples. What could be different this time around? 3 things. 1, management commentary on demand visibility may have a little more optimism than what it has been over the last few quarters. And that's largely because there's been a gradual improvement in rural with contained inflation. But at the same time, there's also some growth headwinds emanating in urban consumption. And finally, the last few quarters have been about good margin expansion. But going forward, levers for margin expansion could also be limited as companies are passing on price hikes and reinvesting margin savings in ad spends as well. Now, what do we know already? From all the updates that have come by, Godrej Consumer has reported high single-digit organic volume growth, double-digit when it comes to consolidated business. Dabur has reported mid-single-digit revenue growth. The stock declined after its update, and Marico has returned to positive growth territory after 3 quarters. Jewelry, that's shining. Titan on its huge base grew 19%. Kalyan Jewelers saw India business grow 38%, and Senco as well saw a 39% growth in the fourth quarter. So from the staples squad, given the recent trend and analyst expectations, companies like Godrej Consumer, Tata Consumer, Jyoti Labs, and Honasa could be the likely outperformers in the sense that it would grow higher than the industry, whereas the underperformance from names like HUL, Britannia, and Dabur, as well as Imami, is likely to continue. For the paint brigade, this quarter will see high single to low double-digit volume growth. However, revenues will be lower than that because the prices are lower because of raw material deflation. But for their near future, it's all about the 4 C's. Commentary on crude and competition, which is very crucial. And to wash it all down, from the beverage end of things, one expects gross margins for United Breweries to improve, whereas for Varun Beverages, this quarter may be impacted by winter, extended winter in the Jan to March quarter, but given the heat wave, they may do a lot better in this April to June quarter, the quarter that we're currently in. And finally, the key triggers that we're looking at, any sort of election-related demand boost, prediction of normal monsoon above normal by the Met, and stocks have seen a lot of time correction. Case in point, HUL and Dabur, they're actually at the same levels as they were pre-pandemic. So the question now again, kya ab ki baar recovery yaar?
All right, well, let's pose that question to Abneesh Roy, who tracks the sector very closely. Abneesh, your thoughts? And, what are the stocks where you're still bullish on, despite the kind of sort of volatility or pressure that we've seen in the recent quarters? Where do you think there is potential for maximum growth now?
Sure, thanks and good morning. So definitely FY24, we are seeing investor interest definitely improve because of 3-4 reasons. One, of course, is this time there will be 6% higher rainfall than normal. Last year, it was 6% lower than the rainfall. So clearly, the rural slowdown, which has been there now almost for 1.5 years, we expect that from Q2, that should reverse. Local player competition has been there in FMCG in few categories that will anniversarize in Q1. So again, from Q2, that recovery will start to happen and that will benefit HUL, Britannia, Dabur, Marico, etc. Third, of course, we will see that definitely pricing growth was negative for most companies in FY24. We will see because of the inflation in the salary cost and media inflation and crude also going up. We see that price hike of 2 to 3% will come back. In Q4, a lot of the results will be mid-tier or a bit weakish. So definitely HUL, ITC, Bajaj, etc. results will be weak. But we expect United Breweries, Tata Consumer, Colgate, Godrej Consumer and Pidilite to be strong. And rest of the companies will be in between. From a stock perspective, I think where is the valuation comfort? Where is FY24 likely to be delta because of the reasons which I mentioned? I think Britannia, Dabur, Marico, etc. haven't really gone anywhere as Mangalam also highlighted over the last 2 years, even Hindustan Unilever. But I think in Unilever, there is the problem of higher royalty and the GSK sales going away. So I would say that Britannia, Dabur, Marico, etc. valuation comfort and the drivers for growth are better. Yes.
Abneesh, do you have coverage on Senco?
So in jewelry, clearly the updates are really good. We have coverage on Titan, but clearly we are seeing that the rest of the players like Kalyan and Senco are also definitely copying the template and doing quite well, growing much faster than Titan because of the smaller base. So I will expect that gold as an asset class and organized jewelry will keep taking market share because still 70% of the industry is with the unorganized players, local players. So yes, I would expect Titan and rest of the listed players should also do well in FY25 because of the gold pricing, that confidence, plus definitely market share gains also continue.
Okay, all right. Hi, Abneesh. Good to see you on the show. What about Nestle? Any view out there from the FMCG pack? Nestle actually has been a relative outperformer in the last 1 year or so. Your view?
So Nestle has done well last few quarters in terms of volume growth and pricing benefiting for them. Going ahead, what we see is definitely cocoa and coffee cost as a raw material is on the higher side for them. And we will see that next 5 years, the royalty cost will go up by 15 bips every year. So currently, our pecking order in terms of good results currently and companies growing faster, we will have United Breweries, Tata Consumer, Godrej Consumer and Pidilite. Nestle will be lower in terms of pecking order because of the inflation risk and because of the royalty cost increasing also.
Okay. Any other stocks that you track closely where you are expecting positive, earnings this season?
I think clearly Avenue Supermart, definitely the update was clearly positive. The store expansion has sharply picked up, which we were highlighting, we were expecting. And definitely in terms of the sales growth and same store comparables, also there is an improvement. We expect improvement in the margins also. So Avenue Supermart, clearly the improvement will continue. Same will happen for Nykaa also. Nykaa also, I think clearly the update was decent and last 2 quarters back to back has been good and stock has not really reacted too much to the good performance. My sense is we will see rational behavior of the D2C and that's why we will see Nykaa growing faster than Honasa Consumer this quarter. That's our expectation. So that's also one more company in the discretionary space we should do well.
Okay. Abneesh, we'll leave it there for now, but would love to have you back once we start getting results for analysis. Thank you very much for joining us there. Let's talk about the sort of big driver for global markets, which is geopolitical tensions. This is, of course, the flare-up in the Middle East that we've seen over the weekend. Of course, we had attacks from Iran over in Israel. And then expectations were that things will kind of settle down because that's what we heard from Iran. But now overnight we've heard from Israel saying that they've got no option but to retaliate. That's a quote. Sonal Verma is Managing Director and Chief Economist, India and Asia ex-Japan, and Nomura Financial Advisory and Securities. And we have Mr. D.P. Srivastava, former Indian ambassador to Iran and ex-director Ed Gale joining us to take some questions. Mr. Srivastava, thanks very much for joining us. Sonal, good to have you with us here as well. Mr. Srivastava, I can start by asking you, sir, is there a playbook here? Do you think lots of moving parts? US has said that they will stay out of it. Expectations were that this is it, attack and retaliation, and that's the end of it. But apparently not. What are the chances that this escalates in a meaningful way, sir?
There are in a war situation, there are no scripts. Neither side can really anticipate what the other side will do. US has advised Israel to take the win. And it has also clarified that it will not join in any offensive action against Iran. It depends. In case Israel takes this advice and does not retaliate or does a symbolic action, the situation will subside. But in case it decides to up the ante, there will be definitely a counter strike by Iran. The first time around, Iran telegraphed its strike in advance to Arab countries and also indicated to the US. Next time around, this kind of warning may not be there, and therefore the results could be worse. So I don't think anyone, any side has the comfort of playing by known rules.
Mr. Netanyahu is deeply unpopular in his own country. Is this about domestic politics? More than anything else at this stage? Because as you said, I mean, when Iran attacked, it telegraphed that attack well in advance. They gave a 72-hour notice. So is this about domestic politics more than anything else?
Israel's official position is that they have to maintain or restore the deterrence. We have heard this language when Israel was attacked by Hamas. And of course, there Israel did have justification. Hamas's terror attack has to be condemned. But this time around, the exchange started with Israeli attack on Iranian consulate. So the deterrence argument cannot be taken too far. Iran reacted to what was started by Israel. Now, you mentioned about Netanyahu's unpopularity, and that is, of course, there, and it's going to get his situation is getting more difficult because of the unfinished war in Gaza. They have not been able to either get the hostages released or destroy the Hamas. Netanyahu knows that end of the war could also mean end of his coalition. So there's a built-in escalation in some of the decision makings by Prime Minister Netanyahu.
Sonal Verma is also with us. Sonal, I wanted your thoughts on what the repercussions could be on different economies, right? And more importantly, for our viewer watching us right now, is there any impact at all on India if this escalates further?
Yeah, sure. I think, just to put this in context, I think for India as well as for most emerging markets today, we are actually facing sort of triple threats. One is oil prices and the future direction and uncertainty around that. Second is the higher for longer theme from US with discussions on whether Fed will cut at all this year or not. And third link to that is really the stronger dollar and the spillovers on capital flows and currency pressures. So the uncertainty and risk of high oil price actually is coming in that backdrop. I mean, what it does for most EMs, including India in particular, is essentially it increases the risk on inflation. It increases the risk of a wider current account deficit going forward. And if the uncertainty and tight financial conditions continue for a longer period of time, then there would be also some downside risk to growth over the medium term. That said, I think things are still quite fluid. I think India does have a couple of buffers in place in terms of foreign exchange reserves that we have, and at I would say until at least $110 per barrel on Brent, we don't think the pass-through domestically to consumers is going to happen. So uncertainty is quite high. Risks have increased, but still in a wait-and-watch mode for now.
And Sonal, your global team, are they calling for oil prices higher or sort of stay here lower? That is one. And the second is the rupee. But it's not just the rupee against the dollar. I mean, a lot of Asian currencies are now at multi-year or multi-month lows. So just a word on that as well.
Sure. I mean, so on oil, currently our base case is the Middle Eastern situation actually does not escalate. So we are assuming that Brent oil prices on average stay around $90 per barrel. So that's the baseline we are going with. Of course, there's uncertainty in terms of whether there is a further escalation or there could also be a de-escalation scenario. So, but $90 per barrel is what we are working with. As far as India's macro sensitivities are concerned, we know that every 10% increase in oil price is roughly around 30 basis point on inflation, about 15 basis point on growth, and also around 30 to 40 basis point on the current account balance. That said, I think the spillover from higher oil price to current account is clearer, whereas the spillover from higher oil price to domestic inflation is not so clear because oil marketing companies are likely to absorb some of the increase initially. On your second question on the currency side, yes, I mean, there is pressure from the weakness we are seeing also in Japanese yen, and there's upside pressure in China as well on the currency, which is putting pressure on the broader Asia complex in the higher for longer backdrop from the Fed. I think, for India specifically, actually, volatility has been amongst the lowest in Asia over the last many months. We have seen some weakness in INR today, but the entire point of RBI actually building all the FX reserves was actually to manage volatility in times like this. So we do think RBI is going to deploy the FX reserve buffer that it has to contain volatility. So we are, I would say, less concerned on currency pressures for India in this global backdrop.
All right, we will leave it at that. Sonal and Mr. Srivastava, thanks a lot for joining in and giving us a quick snapshot of how to react to all of this global turbulence as well as the impact that it would have. Let's get back to the markets, which isn't quite ruffled actually. To be honest, it's not a bad outcome today given the kind of global cues that we had. The Nifty is down just about 68 points. The mid-cap index is actually in the green, well in the green, and there's some buying on dips as well. Mitesh Thakkar joins in. Mitesh, the market has been resilient, at least today. What is the strategy for the rest of the day and what are the stocks to look at?
So I think it's the Bank Nifty, which is, kind of slightly on the negative side, but otherwise it's not a big damaging kind of a picture. Also is the fact that, we kind of, after opening and making a low immediately, I think we're kind of trying to hold on to that. So overall, it's a market, which is trying to find some feet at oversold levels, and we might see a pullback. So I have one buy and one sell call. ONGC, I think, and it's moved up in the last few minutes as well. But even now, I think I would be a buyer here with a stop below 284. Look for targets of 305. And on the selling side is, as I said, I think it's the banking backward week. So IndusInd Bank comes on the selling list. Keep a stop above 1533. Look for targets of 1475.
Absolutely. Thanks very much, Mitesh, for that. By the way, Bharti Hexacom with that 8% pop is the biggest volume-led gainer across on the NSE. So that's a big one coming through. It listed at a 30% premium to the issue price. And now it's, of course, moved up sharply even from there. I think there's a brokerage note as well, which has come through on that one. We'll take a quick commercial break here. Lots happening. Market breadth is positive. 3 advances to every decline. So the index may be down, but the broader market is doing just fine. We're back and we put the focus on commodities. Manisha is going to be here to help us with that. Stay tuned.
Let's shift focus to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Well, I'm looking at metals, and while we continue to talk about copper, aluminum, zinc, which are trading at multi-month highs, but there are a couple of other metals as well which seem to be doing quite well in the trade in the last few sessions there. Tin is on radar because the prices are trading at around 2-year highs right now. We have seen prices gain up by 12% in last 6 or 7 trading sessions. And for this year, it clearly has been an outperformer with 27% of gains. Now, the tin prices have been rising because there are supply disruptions seen in major producing countries, which is Indonesia, Myanmar and Congo. There are various reasons. It's electricity concerns, inside unrest, and Indonesia, of course, is looking at regulatory approvals. But having said that, we are looking at supply concerns, and that has been supportive. Also, when you look at the LME stocks, well, they have seen a decline of 46% in this year at 4,145. And when you also take out the deliverable metals, which already have been earmarked, it's less than 4,000 tons of inventory right now on LME warehouses. There is strong demand coming in from electronics and semiconductors, and that is keeping the tin prices on the higher side. It also has to do with the longs of funds, which are holding the highest long positions levels since 2018, also keeping tin prices higher. The other metal that I want to talk about is iron ore. Well, we have seen prices trade at almost 10-month lows in the beginning of April, but since then it has been a one-way rally. $106 a ton is holding right now, and we are trading at a 2-week highs. The Asian activity seems to be picking up, which is supportive, and the prices have gained up by 6% in the matter of last 1 week itself. So when you look at the supply side of it, well, shipments from Australia and Brazil have seen a decline of 28% in last 1 week. Markets also are looking at the Chinese imports, which are at a record 1.18 billion in the previous year there, and there is stronger demand also coming in from the China mills. All of that supportive factors keeping the prices higher.
All right, Manisha, thanks very much for that. So commodities in focus there. Well, let's shift back to stocks. Spark is in focus, and Ekta is here to tell us why. Ekta.
Rima.
Okay, I think Rima is going to take that. Rima, sorry, go ahead.
Well, I won't be talking about Spark, but I'll talk about LTIMindtree, where the stock has been hit because the spate of senior level resignations continue. So just yesterday, the company announced in an exchange filing that 2 senior level salespeople, the Executive Vice President of Global Sales, Mr. Pankaj Chugh, and Gregory Dietrich, have stepped down effective 15th of April, which means immediately. And this is a long list of exits that we've seen in the last 12 to 15 months. I've just compiled in the last 6 months, and the high profile one there is CFO. So this has been one overhang on the stock. And plus, LTIMindtree has a higher proportion of of revenues or spends or dependency on high discretionary spending. So in the last 1 year, the company's revenue growth has also slowed down. The company pushed forward its margin expectations by a couple of quarters, and plus valuations for LTI Mindtree have always been higher than peers. So it's a combination of factors, particularly this senior level exits, which have hurt the stock year to date. Now the stock is down 25%. Back to you.
All right. Rima, thanks very much for that. Now we'll go across to Ekta, who is with us, and she's going to tell us what's happening with Spark. Ekta.
Well, yes, the stock is under pressure today. They did hold their conference call yesterday post-markets, and the street seems to be disappointed because, like I mentioned, I listened into the conference call. There was nothing really very tangible to take home as a near-term trigger post the conference call. So they have mentioned that they will look at their portfolio to prioritize their assets. They will look at out-licensing or partnering earlier than anticipated in terms of other assets if required. Now they are in the process of reinstating their business development activity when it comes to the molecule which actually failed the results when it came to Parkinson's, which is vodobatinib. They are studying it for leukemia as well. They will possibly look for licensing opportunities when it comes to that particular molecule. But when it comes to leukemia, the market size is much lesser than what it was for Parkinson's. So Parkinson's was the real, was one of the real big triggers for which the molecule was being studied for, and now it hasn't really reached the successful outcome. The market size, like I mentioned, would be lesser. The cash balance for the company is around $20 million. They will not be looking at raising equity at this point in time. They would be looking at reducing the cost structure of the company in order to reduce costs. And hence, there was nothing in the near term or tangible to take home as an immediate trigger for Spark. Everything would be long gestation and would be lots of ifs and buts because it's an R&D program that they are undergoing. And that's probably why you're seeing the stock in the red again.
Okay, Ekta, thanks a lot for that. So that is on Spark. But overall for the market as well, right? Just wanted to point out that while the headline index may be indicating red, plenty of stocks are sitting at fresh 52-week highs. So Exide, just look at that. We mentioned that earlier. 5.5% higher now on Exide. It's a fresh 52-week high ever since it signed that MOU with Hyundai and Kia to supply batteries for EVs in the Indian markets. Remember earlier the understanding was that a lot of these global OEMs will manufacture the batteries in-house. But now, after Hyundai and Kia have opened the floodgates, so to speak, of outsourcing the manufacturing of batteries to a player like Exide, this just opens the doors for a lot of opportunities that companies like Exide can have with other OEMs, other global OEMs as well. And that's something that the street has been betting on. Fresh highs over there. Then you have something like a VA-Tech Vabag. We recently had that discussion with them about water desalinization, how India is going through a severe water crisis, especially in spaces like Bangalore. And look at VA-Tech Vabag, fresh high over there at 823 rupees. So a lot of triggers actually for individual stocks. DOMS is another one, 4.5% higher. We were just talking about how, DOMS has seen a Nomura note this morning on Nuvama note initiating coverage on DOMS with a target price of 1944. So DOMS is also another stock which is in focus. So plenty of names. By the way, I also wanted to mention that don't lose sight of the rupee. The rupee has hit a fresh record low today. I think it's at 85.60 or thereabouts. So there's been a gradual depreciation of the rupee in the last many days. And this morning, the rupee is at a fresh record low, 83.50 now on the dollar rupee. And that's the movement we've seen in the last 1 month. So lots happening in the markets. Let's do one thing. Let's take a quick break. On the other side, we will talk about the monsoons and what you can expect from the IMD. DS Pai, the head climate service division at the India Meteorological Department, will be joining in. Remember, the IMD has predicted an above normal monsoon for 2024, which is a good thing, but more details lined up in a bit.
Okay, welcome back. The market's coming off a little bit more. So 95 points lower on the Nifty. From being down 70, there is a leg down, which has taken place in the last 5-7 minutes of trade. But market breadth still remains positive, comfortably, not quite 3:1, but 2.5:1 is the advances decline ratio at this point in time. Just a few other names apart from what Sonia was talking about earlier. Dhani should come up on your screen. 46 rupees, 12% higher. It's got humongous volumes this morning. So that's on your screen right now. Capacite Infra, right? So that's 4% higher, but it's not the gain, but look, the volumes are very, very large on that one as well. AGs, of course, I've been talking about 5.5 higher, 513 on that name. HOEC is up about 5%. That stock's up at about 203, 204. And of course, Tejas Networks is another one, which has got about a 5% pop. Puravankara had a very large move yesterday. And actually, for the last few days, Puravankara has been moving up steadily from 250 to 380 in 4 sessions flat. So that's a very large up move that one has seen. And, Sharda Motor, I can go down the list, but then volumes are a little lower as far as the markets are concerned. I think we've got the sort of quick check as far as the rains are concerned, monsoon rains, and how they are looking like, or how one should expect them to be. We have the India's Met Department predicting an above normal monsoon this year. They're expecting the weakening El Nino and developing La Nina conditions to be a positive factor as far as rainfall is concerned. Private weather forecaster SkyMet has also predicted a normal monsoon. Mr. DS Pai, he's head of climate service division at IMD. He's joining us now to sort of explain to us what they're picking up. Mr. Pai, great to have you with us here on CNBC-TV18. Good morning. Prashant this side. Could you tell us what you know so far with your forecast of an above normal monsoon? What should we really expect as compared to the last couple of years?
If you see that the last couple of years, since 2020, 21, 22, all these were normal or above normal rainfall. Last year, because of the strong El Nino, our rainfall slightly decreased, slightly less than normal, which was around 94%, and IMD had predicted 96%. Now, for this year, we are expecting the strong El Nino year, which is already started to weaken since December late. Now, currently, it is in the moderate level. And in the next 3 or 4 months, it will turn into a neutral ENSO year, and then it is likely to turn into a weak La Nina conditions. So, therefore, we are expecting this year to be above normal, not only because of the La Nina. We are also expecting a positive IOD condition in the later part of the monsoon season. And the winter and spring snow cover over Eurasian region, which generally have an inverse relationship with the Indian monsoon. This year it was below normal, and that is favorable for a normal or above normal rainfall. So therefore, this year we are expecting a good rainfall, well-distributed rainfall throughout the country.
You said you mentioned IOD. Could you explain that, sir?
It is the Indian Ocean Dipole.
Okay.
Similar to the sea surface temperature pattern in the Pacific, there is a pattern in the Indian Ocean which has got a strong influence over the Indian monsoon. So this year, that also is favorable for a good monsoon.
So, I remember some experts, global experts, pointing out that when you have El Nino conditions developing, it could last for a couple of years. That's not clearly the case, right, Mr. Pai? If you can explain that.
Yeah, it's generally the period of an El Nino is one spring season in 1 year. It starts and ends in the next spring season around May. Only occasionally it can extend to a 24 months or maybe slightly more. Just like example, your 86, 87 El Nino. Okay, so there are some examples when you extend 1 or 2, but this year, most of the models are indicating the prevailing moderate El Nino will weaken very fast and La Nina will get developed during the monsoon season.
Got it. What about spatial distribution? Is it too early to kind of, will it be well distributed, the rains across the country?
Yeah, see, each year the rainfall distribution will be unique. But however, this year forecast have a very strong signal of La Nina. Generally, we have observed during La Nina years, most parts of the country get a good rainfall except eastern, northeastern part, where rainfall likely to be below normal. So this year also, model forecasts are almost indicating similar pattern. So therefore, we are expecting La Nina to be very dominant, deciding the rainfall distribution. So except around Orissa, neighboring West Bengal, South West Bengal and Jharkhand and the northern Andhra Pradesh and some parts of northeast part, most other parts will have a normal to above normal rainfall. That's what our forecast currently. However, we will update this forecast around end of May or early June.
Got it. That's good to hear, Mr. Pai. Thank you very much for that explanation. So above normal monsoon, and that is what the IMD's forecast is. And that's an important input for the agriculture sector, which largely depends on these monsoon rains throughout the country. Mr. Pai, thank you once again for being here. Markets down about, 95 points, 22,180 is where we are at. So it's not a big cut or anything. But there is some pressure which is emerging on pullbacks. The Bank Nifty is in, the mid-cap index, beg your pardon, is in the green with about a 50-odd point, 60-point pop. Market breadth still remains very favorable. 2.5:1 is the advances to decline ratio. It's a wrap on this edition of Bazaar. Thank you very much for staying with us. But Chartbusters will pick up on all the action in just a bit from now. Stay with us.